clap.
That wasn't too bad.
No, that was like a solid 4.
Yeah, so we rate the clap because you got to have a spike so they know
sound.
where to start cutting and everything.
Okay.
So it's been the thing we've been doing is always rating, and that's the lowest clap I've ever had.
Is that right?
Yeah.
Oh,
Well,
man.
you're trying not to hurt the sound and the lighting equipment.
Thank you.
Yeah,
Thank you.
but we're in Nebraska.
Yeah.
We're in York, Nebraska. I've never been to York, Nebraska. Anyway, we have, we got done with wheat harvest and it rained. Well, it rained up here. It hadn't rained at home. But and it's like, man, we got to get together. We got to do some podcasts. We got a lot of cool stuff to talk about.
Yes.
Anyway, we have a guest with us today, Boa Saffra, which found out his name's not Boa Saffra, but anyway on the shirt, and that I was like, man, what's Boa Saffra, and found out what Boa Saffra is. I'm not going to give it away.
Okay.
I'll let you give it away. Johnny, you got anything to add?
Well, I mean, Tyler, one of the starters, me and him met 3 years ago. We talked about this, and it's always been something that's been on the back of my mind, never acted yet. But I think it's something that a lot of people have either heard from other podcasts. I am excited to get your perspective as well, because I've heard, Tyler's, and which I love him to death, but I want to hear, your position with Boa Saffra is how you see this deduction and how to utilize it for farmers. So with that, Bruce, introduce yourself, a quick 3-4 minutes, how you got here, and we'll jump into it.
You bet. My name's Bruce Eberly. Grew up in Nebraska, 5th generation farm kid. My career kind of took me into ag lending. I had the good fortune of graduating college in the 80s, and that was a little hard to make a budget work for a starter farmer back then. So anyway, went out in town and got a job to support my farming habit, and ended up doing a lot of really interesting work across the western United States, and focusing on kind of those innovative, more complex type operations, and that's really how I came to know Tyler and Bryce, the founders of Boa Saffra, and was looking at rolling this type of deduction out to my whole book of friends and clients, because it just made a lot of sense, right? We spend a lot on ag real estate. Those prices have been increasing over the last decade or so at a rate that kind of outpaces cash flow, right?
Yep.
So you've got to find a way to manage the cost of that asset. And this is one way, that a lot of guys just don't know, but it's a very cash efficient way to manage that cost. So when they called me up one day and said, hey, we kind of have a need for somebody like you, it didn't take me too long to get on board. And happy to be a part of the company. Been here almost a couple of years now.
Okay.
And the company has been, successful in, kind of navigating the questions around this type of deduction, because even though the deduction has been around a long time, a lot of people just aren't aware of it.
Yeah.
You know what I mean? And that's because the economics of the deduction didn't really work until fairly recently. So it's like, the tax code is this enormous book of rules and sub rules, and nobody fully understands the whole thing. Everybody has their sector, their specialty that they work with, and around agriculture, we've done a lot of work over the last couple of years just educating people, people that handle farmers' taxes, people that operate the farms, people that are involved in ag real estate somehow. So happy to be here with you guys to answer your questions, and I'll do my best.
There we go.
It's so we've mentioned the word deduction here. And I know some are gonna start to piece this together. This is tax deduction for purchasing land. This is something I was telling you before. This is something I've heard about. Know some people that have done it. There's lots of companies. Well, I say there's lots. I know there's companies out there doing this, but I have never gotten a great straight answer from someone about some of the questions I have in doing this, because you buy a piece of land, you look at deduction, and sometimes it's a lot of money. Like some of the dollar amounts I've heard, and you start to go, you're the skeptic in you comes out, and you're like, no way, there's
too good to be true.
Yeah, there's no way.
Yeah.
And then it's a matter of the more the dollars, the like, okay, one, your skepticism goes up, but two, where do I even start? I don't know what to do. Like, it's easier just to, sweep it under the rug. And, a lot of people are like, well, why are you sweeping a deduction under the rug? Well,
there's planting to do, Josh.
yeah, well, I
There's
just need
farming
to go,
to do.
I need to go
right.
spray, or I need to go do this, that, or whatever. It's like, okay, but there is, and I have had a lot of conversations. We have just the last couple of years, really, with the podcast and customers and friends and just people, that the time of agriculture where your dollars used to make the majority of your dollars, and this is going to really upset some people. It used to be you made your dollars with your back. Anymore, you make today's dollars, the majority of them, with your pencil. And, not that you didn't make them in the past with the pencil, and not that you don't make dollars today with your back. But it's very, very much so. The farm used to be, if you worked hard and, that covered a lot of potential losses or built operations. But to maintain an operation today and grow an operation, man, if you're not good with your books and your numbers and everything else, the farmers that aren't are the ones that I see struggling the most. Yes, we are pushed. It is crammed down our throats. The yield is king. All of us love to grow that, record yield. It's fun. It's cool. It's very rewarding.
Mm-hmm.
But at the same time, what was your cost spend to get there?
Right.
Did your cost spend equal the bushels yielded? If so, if it was that your goal, cool. Do you want to be profitable? If so, there needs to be a gap between bushels made and costs spent.
Mm-hmm.
And so the world of finance is something that I don't know, needs to be a light shed on it for agriculture, because it is really, I firmly believe it's the only thing that's going to save the family farm in the future. A lot of them is learning how to be better with tax code, be better with deductions, how to be better with financial planning, all of these things. So can you go into what the deduction is from a 30,000 foot view and then scope down on it?
Yeah, I think so. And that's insightful comments, because, we have, we have a business that's still hard work, right? I mean, you still got to do all those labor intensive type of jobs out there across agriculture. But you've got to blend that in with some really good decision making, and not just maybe in the past where we kind of made things off. That's the way Dad and Granddad did it. It's really looking at the information and making the best decision that we can in the moment. So essentially, what's too good to be true are the prices paid for ag real estate, right? Those are big numbers, and that's driving a lot of decision making. In generational transitions, that is kind of unfortunate in my view, right?
Yep.
So what we've done is made a product, a report essentially, that makes it very practical for virtually any ag landowner to claim an important part of the deductions that are available to them. Just like we would, when you bought a farm, buy a farm and you're going to take, everybody's accustomed to taking some value out for the fence rows and the irrigators and the wells and any improvements that are on there. And they're going to set that apart from that land asset on the books, and they're going to depreciate it out over time according to some schedule. What we do is essentially help these landowners properly identify another deduction that they can take when they buy ag real estate. And it's defined in the code as excess nutrients. Okay. So it's basically you buy and you pay a premium for more productive ground, right? So we're going to help in the process of our work to identify the appropriate number that you can claim on your tax reports, and save yourself some cash in terms of what you owe the IRS. I know, one of the things that is kind of surprising to people is this really doesn't cost the IRS anything. Do you know what I mean? Because every farmer's, the good farmers, right? Everybody that's planning, they're going to sit down with their tax planner sometime in fourth quarter, and they're going to figure out how to get that Schedule F to look the way they want, right? We have a lot of tools in the toolkit. We can defer sales, right? And manage that number. We can prepay expenses and manage that number. We can go out and buy something, right? But all of those things are going to impact you in terms of cash, right?
Yep.
You're gonna have cash sitting somewhere that's not in cash. What we do is a very cash efficient way to manage your tax liability at a very low cash cost relative to the deduction.
Yep.
Yeah. I don't know if that answers your question or not, but it's a capital deduction. You have to be the landowner to claim this.
And you're claiming.
Yeah. So maybe go through the soil test and in the sense of what are you deducting?
Yeah. Well, what we do is we'll go out and actually take soil data right out of your field. Okay. Generally, it's a grid sample. Okay. And on most farms, it's about a 10-acre grid. Sometimes on the ranches and grasslands, we'll get to larger grids.
Okay.
It kind of depends on how complex the soils are and contours and things like that. Because our duty is to get a representative sample of data.
Yep.
Right. And so we work very hard to make sure we do that for our clients. So we'll go out there, collect the data. We pull that information back into our system, and we combine that with market value information, on each of the nutrients that we're evaluating, and that puts that gives us like a total value, and then we go through and we make some adjustments that the IRS wants to see in there, make sure that's all done correctly and appropriately for each client, and then we publish that in a report to the landowner, and then it's on average it's been running about $1,700 an acre. So
Wow.
On a quarter section of ground, you're looking at saving or reducing your taxable income by $250 to $350 grand.
Yeah.
Which can make a difference, right?
All right, guys, we are dropping multiple mini-series on YouTube going over crop management, farm management, all kinds of stuff on the farm.
Yes.
Lots of information. Check it out. It's good stuff.
We'll see you there.
Okay.
Oh, 100%.
And
So this is the nutrient, it's a deduction based on the nutrient value of the soil, profile of the soil.
yeah, we kind of convert content to value in our
Okay.
process, and then we make sure that it matches up with all the guidance from the IRS and top tax, attorneys and filers that give us feedback on what they think is best. So we've listened to a lot of people over the years, and we've got advisors and counsel that have done a lot of this for a lot of different clients, and this is, we follow the best advice available in the country.
So let's walk through the purchase of a farm. So
Yeah.
I'm going to, I bought a piece of property. I call up Boa Saffra, which means.
Good question. Our founders, Bryce Earlbeck and Tyler Brook from here in Iowa and Nebraska, both at different times and different places worked in Brazil. So they both know Portuguese. Boa Saffra is just Portuguese for good harvest.
So buying a farm.
Okay,
I wanted to get that in.
Yeah,
It's
good.
It's giant boa safari. I'm like, we're going snake hunting, baby.
Yeah.
So I buy a piece of property. I know of this. Okay. I've heard about this. I heard about this on a podcast. There's a deduction out there. I don't know what to do with it. I bought a piece of real estate. I don't know what to do. I call Boa Saffra or another company that works in this. You're here, so I'm gonna pick on you. I'm gonna call. What do? I don't know what to do.
Yeah. The starting point with us is there just an online form that gives us the particulars on the owner. If there's a contact that's separate from the owner, if there's a tenant involved, we need to know that because we need to get permission to go on the property. And then the particulars on the real estate that you want us to work on, right? So it's a very, benign process. I mean, it takes a few minutes to fill out one of these online forms. Once that gets submitted to our office, we take the information that you give us and turn that around in a written contract that has maps, like aerial maps of your farm or farms, and we send that back out to you and say, okay, does this all look right? We want to make sure that we're all, looking at the right property and everybody understands how this process works. And if everything's right, they just sign it, send it back, and then we immediately get soil orders put together on our work orders put together for our soils team to go out and work on that. The entire process takes about 60 days from like a signed agreement to a delivered report on average. There's things that change that from time to time. Like right now, we've got people that are signing up over the summertime and they're standing crops on the field. So we're not going to go in and sample that until after harvest. So we put those on a harvest hold until harvest happens, and then we'll get out there and finish the report after that. Sometimes we need some kind of information from the landowner, and if they delay in getting it to us, I mean, we can't move any faster than the client provides the information we need to get the report done. So, but in general, if everything works smoothly, about 60 days from front to back when you're planning, in terms of getting this in time to file with a tax return. And the due date for the report isn't necessarily, say you bought your farm in 25, right?
Okay.
It's not necessarily 12/31 of 25 when you have to have the report done, right? You've got an acquisition date that is on each parcel, and you're going to provide that to us in that information request, and that's going to be published in the report. So it's really clear in the report what farm we're working on, when was it acquired, what's the nutrient load, what's the deduction, how's it all work. It's all laid out in the report. And so really your deadline is whenever you want to file your return. If you're an early filer, a late filer, whatever that is, that's what you need to plan for so that you have that report in hand when you go to complete and submit your tax return.
Okay, so I submit, I go out and fill out the form. You guys send it back, and Ariel, is this the correct farm? You guys go out and you soil sample. What causes a deductible event? Is that the right term? I mean, basically, how do I know there's a deduction? Are there levels that I have to meet, or their land has to meet? What doesn't qualify?
Yeah, that's a really common question.
Because it feels like, okay, let's sample every acre everywhere and never pay taxes again. Well, but it's like, sure, I mean, there's guidelines. It's like, what's the starting point? What even does every farm make sense? Do more farms make sense than others?
Yeah, there's a couple of factors you need to think about in choosing, whether to proceed. One is the land needs to be ag real estate, right? It needs to be in ag production of some kind. That can be row crops, it can be haying, it could be grazing, it could be, any kind of production activity. It just can't be like idle ground or set aside ground or, no production. We've had people that came and, bought land that they were going to develop for housing, and it just because it happened to be zoned agricultural, but there was no production going on. It's just an idle piece of ground. That's, in our opinion, that's probably not, you know what I mean? Not a very defensible deduction if you do ever get challenged on the deduction. So we're always trying to figure out how to make sure that, everything we do is going to survive whatever happens down the road with the client,
Well, you want the IRS to look at a form and go, oh, Boa Saffra did this. It's probably on the up and up.
Yeah.
Or whatever company it might be. Yeah. In good standing. I mean, it's in your best interest that everything's on the up and up.
Right. Yeah. And we do, we've had, we're batting 1,000% on those kind of things. So we're really, feel like we're doing the right things. But once you say, okay, I've got this ground that's in ag production, you kind of have to think about the economics of it, because the deduction is available to the landowner at the time of acquisition. Okay. If this land was purchased long ago, a lot of times the economics aren't going to work out very well, because then we have to go back and do some forensic agronomy to get to that original soil nutrient load at the time of acquisition. And we're going to use market value data for the nutrients at that date of acquisition.
So the price of nitrogen at that given time, phos, whatever, so on and so forth. Yeah.
Right. Okay. So what we found is, even though this deduction has been on the IRS, in the IRS code since 1960, it's been around a long time.
Oh, wow.
It really, the economics don't work until after, if you guys remember 2008, 9, 10, we had the ethanol boom. We had a lot of pressure on supply chains for inputs. We're expanding acres all across the country to feed these new plants that were being built all across the country. And that's really when our input costs went up, not by percentages, but by multiples, right? I mean, It just went up a lot. And because this deduction is valued at the market value for that nutrient at the time. That's the nutrient value went up, the deduction value went up, and by the way, land prices went up too.
Mm-hmm.
So everybody's kind of trying to figure out how to make an acquisition of expensive ag real estate make sense.
Yeah.
And this is one of the tools to do that. So really, if you look at, if you came to us and asked, we'd probably recommend anything bought before about 2010. You're really going to be doing more work to get through that hindcasting process or that forensic agronomy process, and you're going to be chasing a number that's getting smaller and smaller the further you go back.
Gotcha. Okay.
So we also, people that have maybe acquired land through a tax-free exchange, what's like a 1031 type exchange.
Yep.
That brings the basis from the old property into the new property. So you relinquish a property,
Yep.
and that basis gets transferred into a target property. We've often found that that old basis coming forward is really small.
Okay.
And when you take a capital deduction against your capital asset, your ag real estate in this case, you've got to have a basis to deduct against, right? So if that's too small, that starts to become a limit on the real value in terms of taking a deduction and reducing your taxable income for this type of a deduction. So
Okay.
those are just a few, ag use, kind of the timing, is the market values and all that right for this type of deduction. And then, kind of thinking about that basis, that tax basis, make sure that you've got enough tax basis that you can actually use the deduction.
So is there anything, so let's just say Josh actually bought this farm in 2011, but it's 2025.
Mm-hmm.
He listens to this podcast and says, hey, I want to do this.
Mm-hmm.
How much harder is it, or is it fairly...
It's not too difficult. We do have to collect from the landowner the crops and yields,
Okay.
for those intervening seasons.
Mm-hmm.
And with that and a little bit of information, if they've done any soil amendments or alterations to the soil, we're able to get through forensic agronomy that original nutrient load. Which the agronomy in this is very much like when you hire an agronomist to come out and you tell him, hey, I want to grow, my target is 235 bushels on this field. He'll go out and do some soil work and come back and say, okay, here's a prescription. If you want to have that kind of a crop opportunity, here's the nutrients you need to put in there to make, make that work. We're doing the same thing. We're just doing it in reverse. Okay.
Gotcha. Okay.
We're just
Yep.
going back
Yep.
through that crop production
So
history,
it's
yields.
pretty much
and-
just a history audit to
It
help
is.
you
It's-
guys narrow down through everything that came off and was put on
Right.
the original value or
Right.
the original, I guess, starting point. Yeah.
Right.
Date of
So-
purchase.
So
Yeah.
with that, we get that report. Is that a correction of a tax in the past, or is it a new deduction from this year forward?
Well, the deduction is going to happen in the current year, to my understanding,
Okay.
in most
Okay.
cases, because what you're essentially going to do is say, hey, in the case of your 2011 farm,
Mhm. Yeah.
okay, we're gonna go back and we're gonna tell the IRS, hey, we overlooked something, right? It happens. Sometimes we forget a tractor, we forget something. We're gonna make a correction, and it's gonna be on this year's return. Okay, so your deduction occurs in the current filing period, but you're going to have a little bit of extra paperwork there to say, hey, we're making a correction. This is what's happening here. So
Okay.
Do you guys help with direction on how to put that correction in?
we do have two CPAs who are nationally known and experts on this kind of thing that we keep as on retainer. They're not employees; they're still third parties. But you can, if you were a client and your CPA's got questions on how to get through this, we could schedule you with them, at no cost to you as a client, to have that discussion, because your situation is different than mine and different. It's all that's a very unique discussion.
Can you spread this deduction out over multiple years, or do you have to claim it all in 1 year?
My understanding from the tax guys is it can happen that I know a lot of people take it all at once, especially if they're active ag income.
Mm-hmm.
So that Section 180 applies.
Yep.
But there's other cases in the tax handling where it gets spread out over as much as maybe 10 years. You know what I mean? It just kind of depends on whether you're active income or passive income.
Sure.
And how that lays into that particular tax situation.
Well, and this is kind of going just into tax 101 too. If you're getting a deduction, the reason why you're using that deduction is because you were profitable, right?
Yeah.
I mean, if I think of the economic conditions right now too,
Yeah.
Budgets are tight. Honestly, when tax season comes around, maybe I don't need an extra deduction, right?
That's where my mind was.
But it's just like one of those things. Like, remember, it's going to be off of that net net income, and then that's what you're helping bring down, in that situation.
That's what you're helping bring down. Think about the producer though that's had a few good years, right?
100%.
And he chose as a result of that to just defer sales. So he's sitting out there with a couple of years of crop in the bin or maybe on a warehouse receipt, and now he needs cash, right? Well, you go out there and you convert that to cash, that's going to create a taxable event.
That's a great point. Great point.
And so now you're going to need some way to offset that, and you don't want to blow all your cash because your banker's, dealing with this tight budget, or your operation is dealing with this tight budget, and so this is a very cash efficient way to make that happen, to offset that.
Well, and it's good. I mean, I look at the services you guys provide, and I mean, so my mother-in-law's a CPA. She's actually worked with some of the CPAs with the company and said it was so much clearer after that. At first, I mean, there was a little bit of doubt, too good to be true, right? But she said after hearing the process and what was going on, she could get behind it so much more. And I mean, it was a sign of relief for me because I was just the son-in-law that said, "Hey, you should be looking at this." Hey,
idea.
poke. So, but it's a tool in the toolbox for guys, just like anything else in agriculture. That if it's time to pull out that tool, or is it time to start working on that tool now for the future? It's just something to put in the back of your mind,
something to think about,
maybe right in the forefront if that's the situation.
Well, that was what my mind thought was. Okay, corn's got a 3 in the front of it, probably not going to need as many deductions, or maybe so. Maybe you still need. Maybe you've got sales from past. Maybe you've got contracted. Maybe you did really well contracting, and you are looking at a taxable event or a heavy one. And also, this is a lot easier in my mind. I mean, I'm a pretty simple thinker, and so I'm like, okay, this is a lot easier deduction than buying a new piece of equipment just to lower my taxes, because oftentimes when you purchase a piece of equipment to lower taxes, the amount you end up paying for the piece of equipment was more than just the tax hit.
Yeah.
So, it's like I need to deduct $100,000, so I'm going to go buy a $200,000 tractor. Well, did you need it? Or did it, it happens all the time. And it's easy to,
it does.
It's bad because you justify it in your mind. I need a deduction.
Oh,
I also want
I do it every year.
Yeah, it's like this gives me a reason to go buy it.
It's like me buying it at 50%, right?
That's right,
That's
half
exactly
off.
what it is.
That's right. It's a half off combine. How are you gonna pay for the other half? We'll worry about that later.
Depreciate it over
Depreciate
here.
it.
It'll be good.
That's fun.
Yeah, and it's a very common discussion. I mean, everybody's trying to figure out how to keep their earnings in the business, because agriculture is a cyclical business, right?
Yes.
Yeah.
We go through good times and we go through lean times, and that's just kind of the nature of the business that we're in. So you do have to manage, those really good years, right? So that you're not caught, when a lean year rolls around, and you've got, you want to make sure you got some dry powder to operate with. So, the one thing that when you talk about a toolkit of those tax management, at year end, the one thing that's a little different, instead of, if you need a $200,000 deduction, you got to spend all of those dollars, right?
Yes.
If you're going to buy something, or if you're going to defer sales, you forfeit all of that cash for a period of time until you decide to sell it in the future, or prepay, right?
Yep.
Which then you've got the risk of, maybe the counterparty doesn't make it through the winter, things like that kind of bother, people at times. So, but what we do in just say round numbers, our average deduction across the country is $1,700, right? An acre. So if you are in a 30% tax bracket, you can reduce your taxes by $1,700 an acre. That's $530 of cash that you're going to keep in your pocket that year as a result of this deduction.
Yeah.
And we're going to charge you $40 an acre to get there.
Yeah. Okay. So $40 an acre is the cost.
So $40, and you're gonna save $530, right? I mean, if I had a jug of something on the table here, that you knew you were going to get $530 out of that jug, and I was going to price it at $40, would you buy that jug?
I'd buy 2.
Exactly.
Dang.
Well, and
Yeah.
and the part I get to as well is that the services you provide is another deduction, correct?
Yeah. The $40
So-
is deductible too. So yeah.
Dang.
Yeah.
We're just
So you're getting
covered in deductions.
Yeah, just deduction here, deduction there.
Okay, so cost is $40 an acre. Con
B.
Worse.
That's a B.
Boa Saffra. I don't know where ConAgra came from. Oh well. Anyway,
Actually started in Nebraska.
did it really?
Yeah.
Yeah.
So did I see a ConAgra
Used to
sign
be-
coming up here?
It used to be Consolidated Mills.
No.
Yeah.
Yeah, that's
Yeah.
right.
Okay. Anyway, yeah. So $40 an acre. Okay, that's my cost. I'm looking at. Let's say, okay, 100 acres. Cost to get into this. Is there any like, hey, we don't guarantee that you have a nutrient value here? Is there a way for a guy to know?
Yeah, if you want to call in and just visit with one of our team, we can give you. I mean, we've done work in every state, so we can give you tell us what county your ag real estate's in. We'll tell you what the neighborhood's doing right now. You know what I mean?
Mm-hmm.
What reports in your area have yielded in terms of deduction value.
Okay.
So it gives people a pretty good indicative value when you're just trying to make that first decision that, hey, we want to go forward, because you're not going to know until we know, right? I mean, nobody knows until you know. But we can get you kind of a neighborhood number that would get you, at least what you're looking at. You know what I mean? There's a few areas. We looked at a ranch up in Oregon that had vastly diverse soils from one end to the other. I mean, it was alluvial less on one end and like volcanic ash on the other,
Yep.
and really different soils. So sometimes it's a little more complex to answer that question, but it's we can get you in the neighborhood. You know what I mean?
So you got a
Just
100 acre
upfront.
field. It's like, hey, here's my 100 acre field. Is there any starting point? Pretty good chance that there's going to be at least a starting point.
Yeah.
I mean, okay, so what if I've already grid sampled this ground?
Well, it's an interesting question, and we've come to the conclusion in our business that our clients are a lot happier when they let us do the soil sampling,
Sure.
because a couple of things. We're using different methodology, right, than like an agronomy sample would use. We're using actually a digital probe system that reads, the nutrients in their native environment in your field, right? And at the end of the day, I mean, we're going to read attributes out of that soil that are designed to support the tax deduction work, not the agronomy work.
Yep.
Okay.
You're telling me there's a difference?
Well, we're using. I mean, you're an agronomist, aren't you?
You can rip.
Okay.
No, I'm a farmer.
Okay.
He's an
So I mean, we're using Malick 3 methodology in terms of the analysis. Most of the agronomy labs are going to be using a Bray methodology, which I'm not saying it's just different. Do you know
It
what I mean?
is,
We're not out trying to do agronomy work, right? And so, our clients are happier when they use our methodologies and our equipment to pull the data out of the soil for their report.
Does it help you guys at all if to look at a past soil test?
Well, we've looked at thousands of them.
Yeah.
And it doesn't, I mean, we've done estimates off of, if you've got a grid sample, we'll say, look at it and pick out some of the major nutrients out of there, whatever's available in the report, and say, hey, it looks like you've got, a deduction range in this range, something like that. They can be useful in that respect. But in terms of like basing a report on it, if you think about it, if that client ever gets into an audit situation, I have no knowledge.
Yeah, you have
I have
nothing to
no
stand on.
proof that that
Right.
sample even came off of that ground.
Sure.
Do you know what I mean? Where if you're
Yep.
using ours, everything, all the geocode points, everything is in that data set.
Gotcha.
So we can prove everything in an audit.
And so as I'm understanding this, like let's say phosphorus, is there a starting point to where from this level up is your extra nutrient value, and then there's a dollar amount put on that?
That's one way to look at it. I mean,
Like, dude, go dumb level, like I'm kindergarten here. It's like,
No.
where's like the base line, how this
Yeah.
the value is of just let's say phosphorus, and
Well,
then
it's
based on fertility price at that time or fertilizer price at that time.
yeah, at the time of the acquisition, right? The acquisition date on the real estate. That's
Yeah.
when you set the market value. And as to baseline, I mean that's one of the tests that we have to pass for the IRS. And we do it very accurately, and it varies from farm to farm. So we just make sure that we have the correct adjustments for each individual farm, so that anybody that looks at it down the road is going to be comfortable, right? Anybody that knows what they're looking at is going to be comfortable with the deduction value. And we're conservative. I mean, we only sample the top 6 3/4 inches, right? We all know there's a lot of nutrient down below that. We don't get into that, okay? We don't put any value on N, for instance, because it's transient. It doesn't build up. It volatilizes, it leaches, it gets used up. It just doesn't build up in the soil. So we don't even put a value on that. And what we find is, looking at the macros and the micros that are essential for crop production that are used in our report, even with conservative, the measures of conservancy that we build in to our methodology, the values are still good, for a farmer in terms of getting a deduction. And, we talked a little bit earlier about, nutrient levels and soil sample methodology. One of the interesting discoveries, 2 of them actually, is in the drier areas of the western states, kind of the mountain west of the United States. We found that those nutrient values can still hold in there really good with ground in the Midwestern plains, the more what you think of like the black dirt 3I states. And that's because those areas get a lot less rainfall. The nutrients are not leaching out of there like, they might in other parts of the country. And, people come to us. The second point is we get people come to us and say, oh, I'm not going to include this farm because it's just not a good farm. You know what I mean? It never produces a good crop. It's, it's along the river, it's in a bottom or whatever, they have some reason why it doesn't produce a good crop. And that's absolutely true for agronomy reasons. But when you go in there and you look at that from a deduction standpoint, what you'll find is you might have a really good package of nutrients. They're just out of whack for doing crop production.
Sure.
Do you know what I mean? You may still have
the other underlying issues. Or it could be a drainage, flood out area. It could be something else, a sandy knob that is the first thing to lose the water.
But in terms of, helping you reduce the overall cost of owning that piece of real estate, it still has value. You know what I mean? More so than you might think.
Sure.
So that's kind of some interesting observations. Sometimes marginal ground might not be good for crop production, but there's still a good, a worthwhile nutrient
This would be
deduction.
a value add to marginal ground.
Yeah.
I mean,
you can use it.
This is
in
a lot
way.
easier than trying to raise bushels, to offset the cost of marginal ground.
Right.
I know people talk about, other areas of revenue. Well, what about just money saved?
Yeah.
Well, and that's, we talked a little bit earlier about, when budgets are tight, and we all know that, sometimes a landlord dies and you just have to buy something, to keep your operation whole. And this is one of the tools, a very cash efficient tool to reduce the overall cost of owning that ag real estate by 10 to 20%, depending on where you're at on pricing.
Buying power.
Well, maybe that kind of goes into the next part, and we kind of talked about before this, is maybe some misconceptions. Because one of the misconceptions that we were talking about was, if I've been farming that ground and I buy it from landowner, I'm not able to deduct.
Yeah, I've read a couple of articles published out there that make that claim. Our thinking on that, though, is a little bit more practical. I mean, when you think about a landowner operating a piece of ground for a landlord, generally we don't see those tenants like way overspending on inputs, right? They're prescribing, right? They're doing the right thing. They're going out there and they're
year plan.
Yeah, they go out and they want to grow 200 bushel corn on that farm, so they do their agronomy work. They get their their input prescription and they put that on there, and then they go out and they harvest that crop. So we don't see like huge loads, being built up over time. Soil health can make a big difference for agronomic reasons, but on nutrient load, it's a fairly benign effect. But when you get into the landowner status, now you've bought that farm. Well, you're still going to deduct what you apply in your prescription, right? That's still that's an operating deduction, separate tax code section, different type of expense. But you went out there and bought that farm, right? And you sat there at the auction, you raised your hand 3 or 4 times, you called your banker, raised your hand again, and you figured out how to get that thing bought. Well, you paid for that whole farm and all that it contains, right? And you probably paid more for that farm, partly because it's part of your operation, partly because it can produce X number of bushels, right?
Yeah.
And that's how we price ag real estate, right? We price it on production value. So we know a farm that'll produce 200 bushel draws more dollars than a farm that'll grow 100 bushel. So you just paid again for those nutrients, right? You capitalized whatever was left over on that farm. You had to pay for it again. So it's in my opinion, you've essentially paid twice for those nutrients, right?
Well, and I think it's a breath of fresh air, because I know a lot of times those papers, somebody else has read them, and it just like, well, I'm not even going to look at it again. It's nice to see.
I don't have hope.
Yeah,
I was in the same boat. Like, I haven't bought a piece of ground. It was 3 or 4 years ago since my wife and I bought our last farm, and I'm like, shoot, I missed the window, And now I'm like, maybe this is worth looking into.
Yeah,
Yeah,
it's definitely worthwhile. I mean, if we don't see a value for you in there, we're going to tell you that right up front. You know what I mean?
Nice.
And the reason that we have advising CPAs available is because we don't want anybody to do anything they don't understand, right? We want you to be confident, understand what you're doing, and proceed accordingly, right? So that's our commitment to our clients. We want to make sure that every report we publish is, bulletproof and ready to do the job for the client.
Would you say how many? Okay, so I'm sure you guys have clients that you've had for quite some time. What are the really sharp ones doing with this? How are they using this?
They're doing it, Josh.
Right, I know, but sure, they got to be doing it more than just doing it. Like they have, I would imagine. My mind goes to, I can implement this into a land purchase.
Yeah.
Like they're viewing their next real estate acquisition with this heavily in mind.
Yeah.
While, how do I offset taxes? I mean, man, if I can save, let's say $1,700 an acre.
Right.
To me, that's $1,700 an acre in extra buying power.
Right.
If my cap was $4,000 an acre for a piece of something, $5,700. And that gap is something that I necessarily may not have to pay for.
Right.
I know that's perfect world. That's perfect scenario.
I think you're really stretching it there, Josh.
I know,
because I think as a businessman, it's just like, no, utilize this as a tool based on what your situation needs.
Right.
So do you have a bunch of grain in the bin that you need to sell?
Yeah.
And you need to be able to use so you're not getting taxed, right? Or is it when you're making that land purchase, I know I'll raise my hand one more time. Don't say I'm going to take that whole potential deduction and just say now that's my cap.
Right. Well,
that's a little
sure
crazy.
Gathering data, because it's like, okay, if I did this on this farm and the farm next to it comes up for sale, I have a pretty good idea of, hey, this is probably the value on that land, rough ballpark. How can I use this into my real estate purchase, value add, things of that nature.
Right.
That's where my brain immediately went, but also offsetting, deferring payment of a lot of grain. And then, that's another great one, especially since it doesn't sound like it takes a terrible length of time. This isn't a year's process.
Right.
It's
Fairly
like,
quick.
okay, it looks like it's August. Because I look at my wrist like I have a watch on, and that tells me the time, and I don't. But it's like, okay, I'm going to look into this. I could still use this for my tax planning for this current year, moving forward.
Right.
That's a very powerful tool. What if because I'm sitting here thinking, I have a friend whose dad retired, and his last harvest is all in bins right now, and he doesn't have any deductible expenses coming up.
Right.
Or you got to sell it at some time.
Yeah.
He's going to get murdered in taxes off this. Boom.
Yeah.
Well, and me kind of rewinding back, have we talked much about like family transitional planning there? Like where would this fit in that picture? Maybe where does
Yeah.
it not fit? Just to help clear the waters there.
Well, you got to get your family estate planning right? Or you're going to break up the family and the farm. So once you get that plan put together, though, Dad can use this deduction when he buys ground. And then the availability of the tax deduction refreshes whenever the tax basis gets refreshed, right? So normally I would sell you a farm, right? And you would get a new tax basis on that same parcel.
Yep.
And you can go out and do a soil nutrient load report on your farm because now it's yours, where I might have done it 5 years ago when I bought it, okay?
Interesting.
And one of the ways that we transition ownership of ag real estate in from generation to generation is in our estate planning. And if that beneficiary is getting a stepped up tax basis, that's a new tax basis, right?
Okay. Yep.
So they can go out and do this on the same ground at a time when they're filing estate returns and adding up all the dollars they've got to turn over to state and federal government as a result of that. And maybe you don't have to sell part of the farm. Do you know what I mean?
Wow.
Because this could create enough of an offset that maybe you don't have to sell, or somebody doesn't have to put a second mortgage on their house to inherit a family farm.
Any more misconceptions that you can think of? Maybe it's a better question for you.
I would say, what are some of the main questions you get, the revolving ones that we haven't covered yet? Are there any?
You guys have done a really good job asking questions, and the reality is a lot of our work is just educating people. I mean, once they understand it and they understand how it works, we have very, very few people that depart from the process because the value's there, right? And they did pay for the ground. They bought it. And if they bought it recently, they paid more than they probably thought they should have, right? Because we've all tried to do a cash flow on $10,000 or $15,000 an acre farm ground. And that's really hard to do. It's hard, here in Nebraska, a lot of this pasture ground trades for, $2,200, $2,400, $2,500. Cow can't carry that. You know what I mean? You gotta blend in some equity from someplace to get that to work. So this is just one of those tools that makes it a little less expensive to own that ag real estate. The questions that we get, I can't even count the times when people have said this is too good to be true. But it really is, in my opinion, it's the prices being paid for ag real estate that are too good to be true, right?
Yeah.
Because we can't really cash flow those numbers. It's all about owning the real estate.
People don't gawk at money spent. They gawk most with skepticism at money saved. I mean, really, it's like go drop $80,000 on a new pickup. Okay, that's the price of a pickup. Hey, here's a rebate. I don't know if that's real.
The pickup's still running.
There's no way that's right.
Yeah, and so it's mostly education, but understanding what qualifies. What land can we do this on? Production ground. You got enough tax basis. You're the deeded owner in the property, which sometimes that gets a little confused, right? I mean, we had one of the few cases out there that the IRS has weighed in on was because they claimed the deduction in the wrong place, right? It wasn't the deeded owner. So we want to make sure, we ask about these things to make sure that the name on the front of our report matches the tax return it's going to land on.
Yeah.
So there's just no questions, right? Everything flows smoothly for everybody.
So this is not for an operation. This is for the specific landowner.
This is for the landowner.
Josh Pretzer is a landowner.
Right.
But Pretzer Farms is not here doing this deduction, this process. This is Josh Pretzer, the landowner.
Right.
Yeah.
Yeah. However you've got it deeded. And if it's the LLC that owns the ground, that's where the deduction goes.
I
right.
see.
It's whose name is on the deed, who's got the tax basis. That's where it goes.
Sure.
Yeah.
I've got say there's a farm, say there's 75 acres of tillable, 96 acres of deeded ground. It's considered waste. Bank, trees, waterway, etc. Is like the reported to crop insurance and FSA the acres that qualifies? You said it needs to be an agricultural use, so I assume just the tillable there.
Well, are you grazing that other ground off?
Every once in a while a cow gets out.
Okay. Well, here's the way I would respond to that is if it does or could be an ag production. So maybe you just graze that over the winter time.
It was bought.
You paid for it. Right.
Yeah.
So, the only things that we really can't include are like ponds,
Yeah.
rock beds, stuff that is obviously not,
Sure.
production ground. But if it can be grazed, if it's a tree line or it's a patch that's hard to get to, so maybe you just harvest some prairie hay off of it once a year, or you graze it along with your cropland in the wintertime when you're mowing off your stalks or your stubble.
Winter graze.
Yeah, winter graze the stuff. So, if you're honestly in production, I would recommend that you include it, because your soil nutrients on that same parcel aren't going to vary that much from the center pivot to the corners. You know what I mean? And you're going to pick up a better deduction value, including those acres, than if you carve them out.
What about, this is one question, what about land you have enrolled in CRP?
CRP, the agreements that we've inspected for CRP, by definition, really aren't in production. I mean, it is a set-aside program.
Yeah,
sure.
You're being paid to not produce on that ground.
Right.
And we've even run across a couple of some grassland easements and things where the production decision doesn't even reside with the owner anymore. It's they have to go get permission, and when we've kind of said, again, taken the conservative route and said, probably not a good idea there, because if there's any question, if anybody can pick it apart, probably should stay away from it.
Sure. Okay. So if you've got CRP and you're considering not renewing the contract, put it back into production.
If it's in production, then you're back online.
Yeah.
Yeah.
Okay.
Yeah.
I'm trying to think of any other things, because I sit here and think, okay, what if?
I'll tell you about one of the things that we've run across recently that does complicate the process, and that's when you have multiple owners. Say mom and dad left it in the name of the 6 kids, and they all have these undivided interests in the farm. It's really best if all of the kids participate, because they each, in an undivided interest, legally, they each own 1/6 of every grain of sand on that farm.
Yeah.
I can't go out and take 1/6 of the acres and do my duty to get a representative sample on that whole thing. Do you know what I mean?
Yeah.
For legal purposes.
So what if I set up a holding company that holds our real estate assets. And we have our operation. I've got me separately. If my real estate holding company owns the real estate assets, can I still, and I'm the owner of the entity, can I still do this? Does the entity need to do this?
Well, again,
because there's a lot of trusts and different.
Yeah.
It's not. There's a lot of things now that value is so high, and people are now targeting a lot of real estate assets and lawsuits and things.
Right.
People are putting assets into their own entity over here to protect them.
And in that case, it's that entity that's going to be the landowner, right? And so we're going to do the report for that entity, but the deduction is going to flow through on a K-1 to whoever that owner is.
I was going to say, most of them are flow-throughs.
Yeah, it's just going to pass right through. And and even like a trust, a lot of times they don't even have a separate tax return. It all flows to that to that grantor's tax return.
Yeah.
So good question. These are kind of these ownership structure questions. Do get a little bit murky sometimes, but
well, and I don't know if we said this earlier in this podcast or if it was before we even started talking. Every situation is unique within itself.
It is,
absolutely.
Yeah.
No. How should we say this for legal purposes? Nothing heard on this podcast should be taken as legal counsel. Yada.
Yeah.
That's to make the lawyers happy.
Kurt, just make sure you roll all that during the video if you could. Yeah.
Roll that. This is not advice of what you should do. I want to clarify that. This is just options available out there to every operation to take and to decide on their own how they can best utilize these tools available to them.
Yeah.
Does that cover our butt?
And we tell our clients every time, engage your CPA early.
Yeah.
Let's have that discussion up front, because they need to be part of this discussion, and it just makes it better for the whole experience. Gets better when you have the whole team on up front, because you don't want to walk in, a week before tax deadline and plop a report on the CPA's desk that he's never heard of.
I got this done.
Right.
I could just hear my mother-in-law saying, "You did what, Johnny?"
It'd be a first. It'd be a first.
Yeah, first time that would
first
ever
time
happen.
you ever heard that.
Right.
Yeah. Kirk, are we?
We're about there.
We're probably maxed out.
He's telling us we got to get
How
going.
many more minutes do we have?
2.
Oh shoot. Okay. I'm trying anything. I mean, you've been in this long enough. You've been in agriculture your whole life.
At the end of the day, agriculture, as we've talked about, you do have to be careful with your resources, and cash is one of those resources, and taxes is probably one of the biggest bills over your lifetime you'll have to pay, right? So we should be attentive to what the law allows us to do under the tax code, and we don't know when the next big swing in prices is going to come. And this is a way to, it's just a tool in the toolkit.
Yep.
It doesn't negate the other things that we have out there available to us. It's just another tool in the toolkit that fits well in certain circumstances. And so, we're happy to serve clients. We're happy to take care of, their needs in this particular type of a deduction. We operate in all 50 states. We've got agronomists, that are local to the area that'll go out and do the work for us.
So you pair up with more local. You got
we do
network of that.
Everywhere there's farmland, there's an agronomy team. We just kind of go in and pick ones that work well with us, and they work with us to collect the soil data, and they also help us in the harvest period. Know when harvest's coming off and when to collect those types of data. or those harvest hold data.
Yeah.
But agriculture, it's a variable business. You know what I mean? It's not like opening the doors from 8 to 4 every day and selling stuff off the shelf. You got to do a lot of long-term planning. You get a lot of crops. You get one shot to do it right every year. And so you got to have some tools in the toolkit to make sure you can manage your results every year.
That's great.
Yeah.
That was great.
Well, I appreciate the chance to visit with you.
Well, thoroughly enjoyed it, and thank you for making this work today.
You bet.
Yeah, it means a lot.
No, because man, we're trying to bring things that are available in agriculture to light to help more people, because I know that this deduction, I'll just call it deduction, can help farms like tremendously. You said estate planning or deferring payment or added buying value, etc. So, if you're not looking into it, I don't know why it doesn't hurt to look into it and see if it's the right fit for you.
Make a phone call.
No harm. There's no cost to understanding something, right? Sure. So we're always happy to visit with people if they just want to kind of flesh out the details. And understand how to proceed. So we're happy to help out.
Cool.
We're all farmers, right? I mean, it's kind of a company made up of farm kids. So we're all out there tending crops and chasing calves and doing those things when we're not busy at our desk working for Boa Saffra.
There you go.
There you go.
Yeah. Okay. Thank you very much.
Hey,
appreciate
thanks very
your
much.
time.
You bet.
This was great. Hopefully it helps you guys. It helps a lot of people get some clarity and a starting point, because these are questions I had. But anyway, thank you.
Yeah, you
appreciate you guys. Be sure to like and subscribe to the podcast. And if you're interested in looking into this, if you have someone you're working with, great. If not, give Boa Saffra a call.
That's right. You can find us online.
Yeah.
Awesome.
Yeah. I mean, we're not sponsored by you guys. This is just this is some people I know in this space. Let's get together and have a conversation.
Well, appreciate the invitation. It's nice to have a chance to visit.
Absolutely. So, all right. Thank you guys. Appreciate it. Catch you later. Guys, thanks for watching the content so far. If you would like to see more, be sure to subscribe to our YouTube channel. We've got all the full-length podcasts, other video information, tutorials on there. Also on all the major podcast platforms and social media sites, Facebook, Instagram, TikTok, etc. So if you like this, go ahead and check more out on all those platforms.